Good afternoon. This is Xavier with Daley Paulk, and today we're going to be talking about uranium and why, if you want to get rich, you need to buy uranium. Let me repeat that again. If you want to get rich, okay, if you want to make money in today's market, just invest into uranium. It's one of the easiest plays out there, okay? Aren't we getting rid of fossil fuels? Are we moving on to clean energy? Getting away from oil and gas and coal? All that electricity generation, uranium is going to be the one that takes its place, okay? So today we're just going to go over that a little bit, and I'm going to explain to you the data behind why the rationale behind that is just so relevant today. And we're going to be looking at the historical chart patterns from uranium. And the first thing we're going to look at is Paladin Energy, okay? Now, Paladin Energy, it was ran by a company. Paladin Energy was ran by the CEO, John Borshoff, who is the current day CEO of Deep Yellow. So Deep Yellow and Paladin Energy are uranium companies, and from 2000 to 2009, Paladin Energy went up 1,000x. Okay, not 1,000%. It went up 100,000%. It went up 1,000 times. So $1 was $1,000 in essentially a 4-year time frame. Look at the chart over here. From 2003, it's around, let's say, 10 cents, and in 2007, it went all the way up to $80. Okay, 10 cents to $80. Do the math. That's what uranium does. Okay, just like the name implicates, uranium it goes nuclear. Okay, when uranium starts to take off, it starts to take off. All right. So yeah, we're just gonna talk a little bit about that today. First, in order to know about uranium, let's go over how it even works, okay? So you get like a little block of uranium. It's extracted from the ground. It's processed. It's converted. It's enriched, which means it takes up a higher concentration of just pure uranium, and then it gets thrown into what's called a fuel fabricator, which is essentially it gets thrown into some technology to be used for nuclear power plants, okay? So there's 6.5 trillion tons of uranium all across the world. We can't use all of it because it's all not potent enough. Okay, it's in really low concentrations. It's not combined enough for it to actually be useful. A really good example of this is if it takes $1,000. Okay, if it takes $1,000 to get 1 barrel of oil from the ground, how much is that oil worth? Okay, well, it's worth nothing right now. But if oil prices go over $1,000 a barrel, then that oil is worth something. It's the same thing with uranium. There's a lot of uranium everywhere, but it's in really low concentrations, and it would cost more to dig the uranium out of the ground than the uranium would even be worth. So a lot of it's not economic. The uranium that is economic is the uranium that matters. And the economics of mining, it's all physics, okay? So if you want to learn about the economics of mining, it's really just energy return on investment and physics and cost curves and stuff like that. But we're not going to talk about that today. The only thing you need to know is that uranium, it's mined, it goes through like a mill, it's converted, enriched, and then it's fabricated. All right. Uranium is one of the most energy efficient things on the planet. Okay, 1 pound can power an average U.S. home for 15 years. All right. Really sit down and think about that. Just 1 pound can power an average home for 15 years. So whenever we get tons of uranium, just imagine the amounts of energy that could be. All right. So looking at spot prices, this is uranium price, how much a pound of uranium is. Ever since 2020, it's had a compounded annual growth of 21%. So since 2020 to where we're at right now, it's gone up around 21% every single year on average. You can peep this really big leg right here, and then it did a pullback, and now it's retesting. I think it's going to continue to go up. I'm positioned for it. Are you positioned for uranium to go up? Okay, look at from 2000 to 2008. This is freaking parabolic. It's going straight up. This is a hockey stick. Okay, we're gonna get some hockey stick motion. Okay, just wait. And the compounded annual growth rate for the equities is 40%. So we know the physical uranium's taking off. Physical uranium's going nuclear. Okay, the uranium equities are gonna go even more nuclear. Okay, and 2020 was the capitulation bottom. Energy absolutely did terrible during 2020. A lot of uranium companies almost went bankrupt, but ever since that moment in time, it's just been nothing but green. Actually, it hasn't been nothing but green. A lot of people aren't very patient in uranium. They would sell around here, here, here. They would sell here, here, here. But if you just buy and then just hold throughout its entire phase, you're gonna make a lot more money than these people that are trading, buying low and selling high, buying low and selling high, and buying low and selling high. No, what you want to do is just want to cost dollar average in throughout this entire period. Okay, good time to buy would have been the beginning of 2021, and then you would have just held, and then there would have been a pullback. Okay, and then you would have just bought more in 2023, and then held, and then maybe what is that? Beginning of 2025. Big red candlesticks, because at the time in 2025 they didn't know this would have reversed. You would have just bought more, and then you would have reaped the benefits. Okay, because in less than a year, in 2025, it went from $20 to $48. Okay, right now uranium's up 100% year over year. Okay, so to put this in perspective, all right, the total market cap for all the uranium companies is only 80 to 100 billion dollars. Guys, that's freaking peanuts. Okay. It's like the size of a company like Dell Technologies, which has been around forever, but they've been taking a lower and lower slice of the technology pie the last decade, and uranium is only increasing. It's apples and oranges comparing the uranium sector to Dell Technologies, okay? But it does give a really good analogy to how small the uranium sector is. If one single technology company can be the size of an entire energy sector, that means either that the technology is really expensive or that energy sector is really cheap. Well, let's take a look. Coal, gas, oil, all of these, what do they all have in common? They're all dirty. They're nasty. Okay, they produce a lot of carbon. Okay, we're going carbon zero in 2025, according to all the politicians. The politicians are going to try to go net zero by 2050. They're gonna try, but let's see if it happens. Okay. In order for that to happen, nuclear is gonna have to at least become a greater share of electricity generation than gas. Okay. And this is from the IEA. So if you had any questions on where I'm getting this data from, it's from the IEA. So yes, 9% of global energy is priced the same as an American legacy tech company, which is just mind-boggling. Whenever you really put it in perspective, okay. And nuclear's the cleanest energy on the market. It's the cleanest clean energy on the market. All right, there's solar, there's wind, there's geothermal, and nuclear. Total tonnage required to build 100,000 or 10,000 terawatt generation. So this is the amount of physical materials you need to build to generate said amount of electricity. Solar, you need a lot of silver, okay? You need a lot of platinum. You need stuff for LEDs, so you probably need some rhodium and palladium, okay? You need a lot of precious metals. For wind, you need copper, you need steel, you need aluminum. You probably also need silver as well. They take orders of magnitude more commodities to produce energy than nuclear, because solar and wind, there are essentially a bunch of commodities transformed into technology to produce energy. Okay, nuclear, it really derives from uranium and how uranium isotopes are changed and essentially evolve, and then use technology of the nuclear isotopes to produce orders of magnitude more energy than solar or wind ever could. The energy return on investment in nuclear is a lot higher than solar, wind, and geothermal. Okay, so let's look at past uranium bull markets. Already went over this. Paladin Energy from 2003 to 2007, it went from 10 cents to $88. Okay, 10 cents to 88 freaking dollars. That's $1,000 bagger. You would have put $1,000 in 2003. You would have had $1 million in 2007. Okay, I'll say that one more time for you guys. You put $1,000 in 2003. In 2007, you would have $1 million. Okay. What companies are performing like this? What sectors do you see these type of price movements? Both on the upside and the downside. Because it also went from $88 back down to 50 cents in what, 10 years. So what sector do you see such volatility and potential upside? I don't know. The only other sector I can think of is maybe oil drilling companies and maybe some silver stocks. I think that's pretty much it. Maybe dry bulk, but I might be getting ahead of myself. Okay. This is Cameco from, again, 2000 to 2008. You can see a really big, strong bull market right here. First leg, second leg, third leg, and then a capitulation top in 2011, and then a big declining trend line, and we broke it in, guess what, 2020. Okay. So it went from around $1 to $30. So it was around the 30 bagger in the early 2000s. Now it's already a 10x since 2020. There's a lot of momentum behind Cameco. If you're looking for a really safe, large uranium company to invest your money and put your money into, Cameco and Cameco Corporations is an absolutely brilliant company. I think they produce more than, like, I think it's 15% of the world's supply of uranium. Most of the uranium is actually produced in Russia and Canada. So the fact that this is a Canadian company really gives it a good premium to geopolitical risk, because obviously we're not the best friends with Russia. We're not best friends with Canada either, but, like, at least they're our neighbors, okay? Another company I like to look at, Energy Fuels, UUU. It IPO'd at $150, okay? It IPO'd at $150, so at the end of the bull market, it was valued. Oh, yeah, at the end of the bull market, it was valued all the way up here. It got sold off to $1, so it went from $150, okay, to $1. It went from $150 to $1. Why? Because this is not the favorable market conditions for uranium. This was a lower interest rate, declining inflation environment. Now we're in a higher interest rate, increasing inflationary environment. And if you're interested on, like, how and why those market conditions affect sectors like uranium, I would go back and watch my old video, housing, inflation, and interest rates all tied together, because it's all tied together, and I explained that in the video. But since 2020, I mean, from $1 to $16, baby, the momentum's up. The momentum's there, okay? Are you gonna catch it though? The momentum's going on your side. You just gotta catch it. You just gotta put your arms out and take it. And look at this pattern. So it's a declining trend line, double bottom. Look at this. One butt, another butt, and then it goes up, it retests, and then it breaks out. This is a beautiful pattern. Beautiful, beautiful pattern. Another company I like to look at is Silex Systems. They use lasers to do the uranium enrichment process. So go back to the first slide whenever we talked about the mining, to the converting, and throwing it into the fuel generators. They enrich uranium using lasers, so it's pretty interesting technology that really hasn't been commercialized yet. So they're a small company. Another 10 bagger. Since 2020, they've been doing absolutely incredible. Uranium's outperforming everything on the market right now, okay? Everything. Uranium's outperforming Bitcoin, outperforming the NASDAQ, outperforming retail stocks, outperforming gold, silver, oil. I mean, everything's outperforming oil right now. So that's not saying much. But Silex Systems, really good company. You should look out for it. Okay, so this is when we look at the valuations, all right? This is the uranium to gold ratio. So it's the price of uranium divided by the price of gold, and then you come out with a numerical output, all right? So at the top of 2008, which is the top of all of these bull markets, at the top of 2008, we're at a 0.2 ratio, which means that the price of uranium was essentially 20% of an ounce of gold, all right? Now we're at like a 0.009. We're so low that on TradingView, they don't even give you the full number, because, like, it's just so low. Take a look at this pattern. It went down, double bottom, one butt, two butt. It breaks out to the upside. It broke out all the way to 0.5, and then it did a retest back to 0.00, whatever it is. All right. What does this mean? Well, it means in 2020, uranium started to outperform gold a lot. Okay, it started to really rip against gold, but then something happened. Gold started to outperform significantly relative to uranium, but uranium hasn't been going down. The price of uranium hasn't been going down. It's been that gold is outperforming uranium. So the way ratios work is if the denominator outperforms the numerator, the chart goes down, and if the numerator outperforms the denominator, the chart goes up. So meaning when the price of uranium outperforms gold, this chart will go up. When gold outperforms the price of uranium, the chart goes down, which is why from 2008 to 2020 it's in a completely downwards trend line, because gold was outperforming the price of uranium. We're not looking at uranium priced in dollars. We're looking at uranium priced relative to another commodity such as gold. So we're at a really low ratio relative to gold. Okay, look at this pattern. It goes down, double breakout, retest. It broke out of this pattern. Okay, big draw line right here. It broke out of the pattern, and then it did a retest. Okay. From what I've been seeing in investing I've been looking at this since I was 17. So I'm only 21. Okay, it hasn't been forever, right? But whenever stocks do a retest, whenever you see charts like this, you just buy it. Okay. When it breaks out of a pattern, when it breaks out of a very long-term pattern, like a decade-long trend, if it breaks out and then it goes back down, that's a retest. What do you do at retest? You buy the retest. You buy it when it's down and beat up and cheap, and then you wait and wait and wait and wait, and you reap the rewards. You reap the rewards. So take a look at how this pattern looks like this. So this is a falling wedge. So what this really means is there's a big change in investor psychology, okay? Because when we look at this chart in 2008 all the way to 2025, 2008 it goes all the way down. This is 2020, okay? The capitulation low. It's a breakout, and then a retest, and then this is what we're going to see in the future, okay? It's called a falling wedge pattern. I'd love for you to look it up. Look up a falling wedge pattern, and then look up also a double bottom pattern as well. This chart is a falling wedge in a double bottom that broke out and retested, and it's just gonna freaking take off. Just wait. And what makes this even more scary is inflation is just warming up. Okay, so the PPI to the CPI ratio, it's the cost of inputs relative to the consumer price index. So it's the PPI to the CPI, the inputs, commodities relative to what the consumer feels those inputs. All right. So to put it in perspective, the 1970s and the early 2000s were big increases when the cost to produce something was increasing greater than the price to consume it. That's what inflation is. 1970s, early 2000s, and from 2020 to 2022, it went all the way from no man's land, almost all-time lows, to breaking this, what is that, 100-year trend line, and then it did a retest, and now we're going sideways. Guys, if this breaks this line right here and keeps going up, just forget about it, okay? The entire commodities complex is going to outperform everything in such a way that it may break the system. Because going back to a change in consumer psychology or investor psychology would be changed to the frame of abundance in energy to energy outperforming everything. And if energy outperforms everything, the system breaks, especially currencies. But we may talk about this in another future video. So, moral of the story, uranium is one of the best opportunities in the market. It's dirt cheap. The entire world's trying to decarbonize. Uranium's the cleanest way to decarbonize. Money flows are pouring into it, as we saw with all of those charts. The ETFs are breaking out. Individual stocks are breaking out. Inflation is going sideways and beginning to break out. The physical price of uranium is breaking out. And they're not breaking out of small-term trend lines. They're breaking out of decade, 15-year chart patterns. And this is why the opportunity is just so bizarre and so asymmetric, and this is why I put my money into uranium, so I can preserve my purchasing power, and because I just love uranium. I mean, just look at these; they're freaking beautiful. Okay. Another chart I want us to look at. This is uranium to the Nasdaq, and I'm just gonna write this down somewhere. Whenever the ratio goes down, that means the denominator, the Nasdaq, goes up more than the numerator, uranium. Okay, so as you can see from 2008 to 2020, this is clearly a downtrend line. Yeah, I mean it's just so clearly a downtrend line. It broke out during 2022, really. In 2022, it broke out and it did a retest. Remember what we talked about during the retest. You buy during these retests, okay? Because uranium is priced in almost all-time lows, okay? Uranium's priced in near all-time lows relative to the Nasdaq, but then you look at uranium prices in dollars, and it's looking very healthy, guys. It's looking good, okay? This thing's gonna go. It's gonna go parabolic. So think about this. What is the nominal price of uranium when priced in dollars? It's almost about to break all-time highs, but priced in technology stocks, it's almost down here. That means we have all this legway left to run, priced in the Nasdaq, which means that we're probably gonna go all the way up here. Okay, uranium's going to take off. I'm so excited. Another company I like to look at, another company I'm invested in, is called Deep Yellow. Okay, I bought Deep Yellow at around like 52 cents. Here, let's go back. Yeah, I bought Deep Yellow like around here. Okay, I bought it in this area right here because I saw that it was in a falling wedge and that it was very likely going to break out. So I bought it over here. It broke out. Bought some more over here and over here, and now it's only at $1.30. Okay, the stock's $1.30. All right, and its market cap is $1.25 billion. So it's a mid cap company. Actually, it's a small company. Being quite honest, it's a small company. Has a lot of valuations left to run. But yeah, I'm glad that you guys are watching this video. Like, comment, subscribe. Hit the notification bell if yeah, just hit the notification bell whenever you're ready to watch the next video, and just leave a comment of any questions that you may have. I'm an open book. I'm honestly just looking to learn more, and yeah.